What's going on, guys? I'm starting the recording very late. That's my fault. I'm in a call right now with some members here, and I'm just going over some charts, going over some reviews. I was talking about my Tesla trade that was on the breakout through this whole entire cold range. It's a whole market maker buy model, followed by obviously a potential path of least resistance that's in play here. They absorbed all of the liquidity that was sitting off of this massive spread here, and then from there, what happened was. They got the breakout, and then this is where we're looking for a two-way setup. However, I got the breakout. I entered some calls right on the previous day high. This was a really nice 3.8 to 4 hour trade. And then unfortunately, I took way too much time on my trade, and I never realized. And then this just started to pull back, without filling the whole entire gap, which I held a little bit too much importance to the gap itself. However, we're getting an inside bar on almost the same volume. It was an OPEX day, so there's obviously going to be a lot of like dealer work that's there in terms of like repositioning and de-hedging off of what the flows were based like on the 920 expiration. I didn't even look at and see what Tesla was. I know that there was a massive call wall with a lot of open interest on like calls above us up into like 250. So like the fact that we would push into 250 is a little bit improbable just because if you guys know anything about Max Payne, we're going to avoid that. However, we're getting an inside bar with a potential to see a sign of strength above this market maker buy model. And then if it's a failure, this would not be a path of least resistance. This would just be a seller that laid off the gas a little bit or has a little bit more inventory that is sitting within maybe ask orders within this gap that's left behind, right? So we still have a bear gap in store, like up here to play, right? So it's not anything that you take lightly in terms of this just automatically being a long. You have to look at this from two perspectives, right? But I feel like this whole entire campaign down here has a lot of people underwater, and then this simple retest here could offer a really nice trade. However, this is going to be a two-way focus in the next week. I'm going to be looking at the tape heavily within this range, 233, maybe into like 230. And then if we start to get the failure off of like an overnight gap, and then we start to get the bounce off the higher low trend line, maybe we get some weaker volume into where the level was failing and then getting a lower high off of. That's whenever I would start looking for this thing to be a short all the way back down for a trend break down into like 201, 210, maybe 220. I would give 220 first, especially if we started to lose the earnings gap itself at 225.42. And then this is also a very big gap right here. So this is just a big range to lose here. I guess you could take a little zone and mark this out. And then this is a big range to lose from the top. And this right now is technically considered a support. Okay, so we're gonna have to see what happens with this name leading into the new week. However, we have this higher low trend. We have the reaccumulation off of the retest into the footprint candle that happened within the Nasdaq. That would be August 5th, and then that's whenever we started to get the market maker buy model, followed by a diminishing spread, really resembling that this could be a path of least resistance, and then we get the expansion. That expansion leads to obviously now an inside bar right into OPEX on about the same volume, right? So we got to wait and see. Digestion here right above the level would be amazing. I don't know if we really get that. Um, yeah, I don't know. We'll see. We'll see. This is basically the 235 level. So it's these highs from over here. It's these highs. It's the breakaway gap. It's the retest and the hold of the gap. It's technically the breakdown level that shifted structure because we broke down failed higher lows, which were right over here off of where the support was actually created off 235. And then the retest, which was actually the failure, right? So whenever you look at a level with that type of significance, the daily prints off of that range are going to be very important. It doesn't necessarily have to be respected on a smaller time frame because that's just not how the markets work. That's why you need to look at your 15 and your hourly a little bit more than your 5 when you're looking at all of your analysis kind of coming from the daily chart. With that being said, we have another trade here. CCJ. So if the market were to transition a little bit more risk off, I would be really, really, really intrigued with this name over here. This is a uranium name. It's a really nice chart, right? We got a really nice volume pop off of this support. We actually swept an internal support from right over here, and then we started to hold that. Funny enough, it was on really heavy volume, followed by a high tight flag afterwards. If you're a moving average guy, I'm personally not, but this is just a simple retest and a hold of those moving averages, as well as having a maybe a risk tolerance into the support down here for a swing trade, which I really would have liked to catch. I'm not catching a name that's up 8% on the day. I'm just not doing that. If we could get an inside bar right off of this resistance spot, this wick right here, if we can get potentially a pullback into this whole bull gap that's sitting from here, I'm also very interested in this, but these volume patterns are really suggesting that right now, if we start establishing like some sort of bull flag that's on a lower volume sell retracement into the gap, then I'm going to be looking at this to be a really nice long side trade, probably to target up in towards where the breakdowns happened, right? Just because that's how typically how obviously financial markets work is you could take fibs, you could take whatever it is, but if it's a choppy range and you don't have a very clear level, fibs are good. So I'd be looking at like equilibrium or like the 618 or just that general range. If you want to take from here, we already are testing it, but like I think we could test a little bit higher just given the fact of the volume patterns here. Everything that was really involved with this chart is just really, really, really nice. I mean, you could even get all the way up into here. I think this is a target that could definitely reach up towards 48, 46. If you take a look at the weekly chart here, guys, this is where a change of character oftentimes can happen into then a break higher is a lower high attempt followed by a higher low, followed by a push higher. Really nice volume to close off the week with a push higher. And if you take a look at this, it's all just like a really nice, strong, constructive structure off of this gap. And then we do have a retest on into here. We never did, but we don't really need a retest there because this whole range is wiped dry. This is what the path of resistance is so, uh, that's why it's so powerful, is because like whenever you understand that this whole entire range does not need a resistance because the breakout was very constructive and healthy, then that's whenever we would obviously look for just a simple like high or low on the weekly or something. If you're looking at like high or low trends, guys, I know it looks like a break. I mean, that this doesn't matter. Like this just doesn't like matter. And then guess what happened was reaccumulation actually happened on the failure of a previous high or low, which is also a very healthy sign, right? So if you're like I said, I mean it's just a simple failure followed by like a double bottom into a smaller time frame flag followed by the expansion. And then we got some nice news here. I just want to see how this one behaves. There's really not much more to go over about it. INTC, it's going to be a short side trade for me. Um, this one's a little ballsy. I'm not gonna lie. I'm going against the herd here. I think MU in a lot of the underperforming semis kind of mark a little bit lower, and I think MU marks a little bit lower into this earnings. We have a gap all the way down here that doesn't even have a wick into it. Okay, so what the hell? Whenever you're looking at this, guys, this is just a gap that doesn't have a wick into it. It has nothing into it, right? And we have earnings, right? Price typically will facilitate towards those gaps into earnings just for cheaper prices, just to unload and then reevaluate. It's a ballsy move, but it happens a lot. Go take a look at Tesla before earnings. Go take a look at a lot of these names with gaps beneath before earnings. Very, 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 very critical to draw to those spots, right? That's just how the market behaves. Um, I'm not trading MU, but like I might execute some INTC puts off of this bear gap. I think this news could be liquidated. I really do. I mean, it's a ballsy short, but the risk to reward is there for this to target back down into a new lower low. I mean, we could look at this all the way down into like the 18, $19 range from 22. I mean, dude, that's amazing. I don't know how jacked the premiums are going to be just because there's getting new news everywhere. So much there's so much news, there's so much everything, there's so much volume pouring into the options chain itself, right? Sometimes you can get jacked up premiums with that kind of activity happening. That's why pumpers succeed. So I have to check out the chain, I have to check out the premiums. You always want to do that when you're trading. Do any of you do that? I'm curious. Or do you guys just like buy? Uh, uh, I kind of like this chart. I just love the undercut. I really like this fucking disgusting undercut. Like I said, guys, the undercuts, whenever you're able to identify them and then see how they play out afterwards. I think you guys think that I just know things are going to happen on an undercut whenever it literally breaks down. And like I just don't. Like I just look at what happens after. I feel like so many people think I like know things ahead of time, and I don't. This is just a spring that I'm analyzing after we push up above the range and then get a gap up, followed by a nice consolidation, earnings gap up into the range, and then a failed breakout over the resistance, which that doesn't matter because we're getting a gap up into that, and then a push lower into the bull gap, and then a higher low eventually found back into the range off of the spring. So spring, undercut, whatever you want to call it, higher low. Like that's all I'm looking at. And then the progression from the earnings gap itself. What I mean by that, this is technically the gap. Technically. Now we have a potential flag in store. If you want to take a look at the 15, go ahead and do so. Um, I guess this is like where it should be held. Okay. We have an overnight gap right down here, so you can minimize the risk on the trade a little bit more. But if semis catch some momentum, I'm trading this. I'm totally trading this. And I want a support buy rather than a resistance buy because we're still playing with a lot of levels that are like right here, up here. We have a failure up here, right? Like it's a little dangerous, I'm not gonna lie. However, it's a larger underperformer. Um, we have QCOM getting a lot of the attention right now in INTC. I kind of just want to see if this one gets that type of move where like it, people think all the stuff's gonna happen elsewhere and it happens here. I feel like this is just really nice consolidation on like the daily. Like this is one, two. You don't see it? You don't see what? Hello? Oh, I mean the chart isn't that great, but that doesn't that just like doesn't matter at times, you know? It's good risk to reward. It's not that the chart's so beautiful. I mean, I could tell you about charts that are super beautiful. Is the risk to reward good though? No. This chart's really nice. Is the risk to reward good right now? No. This chart's not that nice, but do I make money on it? Yeah. See what I mean? Like what's a super nice chart right now? Like Rivian, everyone was on this one. Horrible risk to reward. Horrible. Probably one of the worst trades that I've ever seen anyone take in my life. No offense if anybody took this here. You could call a chart beautiful all you want. The trade is absolutely horrible. I'm not like I'm not trying to be an asshole. I'm ranting about risk to reward. I yeah, I'm not talking about like you. I'm just talking about like literally every single human being on Earth to love this chart for some unknown reason. Yeah, Marvel's not a it's by no means, guys, is this a clean chart. It's just I want to see the action within semiconductors. INTC is really not a clean chart either, but I know how to read the tape. I know how to trade. I know what to do whenever things show me what they are doing. You know what I mean? Like I don't need a super duper clean daily chart. I need a point of emphasis to risk my trade off of that I know will be respected. Yeah, I mean it's just structure. All it is structure, right? Like this is a beautiful chart in my opinion, but if you don't love it, it's not the I mean, you don't have to trade this. However, I mean, like I said, I'm gonna make money on it. If I see what I see, if I see what I want to see, I'm gonna make money on it. Chart itself, it's not the cleanest by no means. However, we have this level here. We have a very tight range of execution that's sitting within this little gap. Technically, the gap extends from here down into here, right? I'm not looking at that because, like I said, I mean, if you're looking at your risk being, that whole range and you're just looking for like a buyer to step in throughout the whole range, that's not good. I want to see this consolidation hold on this 1, 2, 3, 4, 5, 6, 7 days of consolidation. 7. So technically, it's not the prettiest chart, but always know if you have 7 days of consolidation, the risk to reward has got to be good. If you have 7 days of consolidation on the worst chart in the world, the risk to reward has got to be good. Like that's just how powerful looking at consolidation really is. Same thing with over here, guys. Like this is not like super pretty of a chart, but like, do I make money on it? Yes, I do. Um, do I have I lost on it yet? No, I have not. And why is that? Because I see the distribution that's happening, and then I have a very clear cut, easy, simple, almost like a retard could make money on this. No offense if anyone didn't, but like I don't want to sound like an asshole, but I got to be realistic here. I feel like a legitimate retard can make money on this. Like it's an all-time high failure. This is the 2021 high. This is our external high and our new high. This is not a constructive, healthy bull flag. The distribution has been happening in higher highs on a weekly perspective leading into the level. We have fat failures off of the level and no weekly closure above. Why would I not look for failures at all-time high whenever I see these articles coming out about price target upgrades, bro? Like, why would I not do that? Like, do you know how good the risk to reward can still be on this chart? And I actually still do own some. Take the failure of the level. You don't even have to front run anything related to like I mean, guys, if this gets the mark down like most distributions do, you could be looking at like a 5 or 6 hour trade. And then if your execution's up here, what is your risk really going to be if you get a $17 fade? I mean, I bought them all the way up here. My risk was going to be like probably $4. I got basically a 4R on this. I mean, I had some ads from the morning that I just held on to. So like that was a little unfortunate, but I talked very, 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 very clearly about that being a speculative ad. And then I tweeted it out and put it in here. I'm looking for like the all-time high failure because we have the price target upgrade. The market was relatively strong leading into like where I was looking for like a short, which was like here, and then obviously distribution continues in all-time highs. So I was looking for the all-time high failure. That's where we got it. And I mean, this right here, guys, is enough to realize a gain. But if you're looking at $19 of downside, call it realistically like 16, just because you're not going to top ticket. You're looking at like a $4 risk. You caught 19. You could still catch the overnight gap down here. That's 22. That's a 5R trade, having to hold it for 3 trading days. Target down into supports or down into the bigger, wider perspective of support, or beneath it if you think this is a massive distribution happening with news on the way, something to facilitate price down because the chart looks like shit. It's running dry of buyers. I, you might think I'm smoking crack, but I've done this several times. It could be a 12, it could be a 10R plus type of trade because I think a markdown does happen on a name like this. It's just when, and how far up does it happen? When do we get to UTAD? I think a UTAD's coming here. I really do. I think a UTAD is definitely coming on Netflix. I think this is going to set up my year. I'm gonna keep trading it until I lose. I'm gonna short Apple again until I lose. I'm going to trade all the names I've been trading until I lose, until um, I am proven wrong. That's what how that's what trading is. When I'm proven wrong, I step away. When my edge is no longer an edge, I step away. If it's still there and I still can find that markdown and that good risk to reward, I'm still trading it. So this is a beautiful chart. Liquidation actually happened right into the OPEX close. Obviously, right into OPEX close, there's, like I said, a lot of dealer stuff that's going on over here in terms of repositioning for a new window. Obviously, dehedging any sort of options that are within the chain on the 920 expiration, selling off equity, buying back equity, whatever it is to unwind their delta neutral stuff, I should say, right? So we swept the external high or the internal high, which is a swing high. Our external high is the all-time high all the way up here. This is 237.23, right? So if we actually do start to continue and float our way higher, and we don't find any seller that is really entering into the name aggressively for just a double top. My level of risk here, guys, it's going to be just with this candle. So the closing print, the opening print, the weekly high, it's just going to be something off of this candle. If I find a seller that's willing to sell with this candle, it's not going to be the lows, so call it this. This is my range. 233 into 228. You always have to give yourself a range where it's like, where's my risk and my execution going to be off of? Because where do I think the seller's going to play with this candle? Mine is just the open, the close, the high, not even the low, because the low a day is not important here. It's not a support. We trade support breaks because those oftentimes are bearish. That's not a support break, my friends. This is not a support. I guess it could be because it's a gap. I didn't even realize it's a gap. My bad. It's not really a support though. And I would never want to execute down into a bull gap. So yeah, this is my range, like I said. It's going to be something like this. And likely just the close. It's going to likely be something like this. Okay, so if you give yourself a nice little perspective of risk reward on this trade, I mean, guys, we have a big gap progression level sitting right here. It's also the close of this gap. We could bump it a little bit lower, or we could take the wick. No matter what you take, because I'm going to be scaling profit here or here. Like, it don't matter. Like, if my target's here, I'm scaling profit here first. Short side trade, I mean, take like a risk off of the wick, take a risk off of, take an execution off the level, or like here to here, like whatever it really is. I mean, we're looking at like a 2.5 to 3R already with like not even the best target. and then like down into here, it's like a 4R. And then if I could get the wick execution with risk ever so slightly beneath that spot, this is looking like a 5R almost with a shallow target of a 4R. I mean, that's a nice little trade there. So we're playing a little bit with fire here, trying to trade a lot of the market into a new window, post OPEX, which is like which is tough, but I like this chart. All the other tech charts are really bad, like super shitty. Like this chart is like becoming like a big, big, big piece of shit, like a huge piece of shit. Like it's just developing weekly, s- like weekly structure off of this MOAT trend line. Like I have no interest. Horrible. This is a high tight inside bar on the weekly. Like I can't really ignore Nvidia, guys. It looks like shit. This is like that same like general consolidation that we have like Marvel. And I feel like maybe I should just trade Nvidia. But I think if you guys didn't make money on these moves with I I'm not trying to sound like an asshole. However, if you're too late to the party where mega caps are getting these crazy swings both ways, if you didn't really change your portfolio over here on this short side type of environment with like Nvidia or the long side or the reshort opportunity, guys, there's not infinite liquidity and infinite volatility within mega cap names. Like people think like, oh, election, bro. I have oh damn rest of the year to change my life. No. You have to put some risk on the table and really make these things count that are sitting over here because I think the market could get really sticky over here. That's kind of why I like Marvel because like I don't know how much we really get. By the way, um what I was also gonna say, Rick, I know what you mean about this chart being kind of shit, but I feel like this resistance just needs to go, you know? Like I feel like it just like maybe if semiconductors get strong and I feel like this resistance just needs to go. Like it just needs to get the fuck out of here. Like it just needs the expansion over it. And like this range is so coiled. So like in terms of like how I think it's a good chart, guys, is like whenever I'm ready for expansion out of this like disgusting range, like the expansion is going to be really good. And guess what we got? Guess what we're testing into? A resistance. What is, if you guys know anything about my system, actually, this chart's really fucking good. If you guys know anything about my system, what is it? What is it? How do I treat a resistance based type of trade? And then what do I need to see before that for it to be a valid trade with like what do I need to see? Like what are three examples of things I need to see beforehand to execute in any territory of resistance? Like what are three things on my checklist? Does anybody know? You should know. Dude, I talk about this all the time and it works like it ages so well every single time. Well, resistance being tested multiple times, of course, yes, but there's something very valuable in terms of how I know the resistance breaks. This is how I caught Tesla. This is how I caught solar. This is how I caught all those things. This is how I caught Roku. This is how I caught um, path of least resistance. Yes, that goes hand in hand with the um, resistance being tested multiple times. But no, we're still missing something very big. What's the dynamics of how mid to large cap to mega cap names move, guys? What are the dynamics behind how the auction works, how price moves, how a range behaves, how the range finds the expansion, what needs to happen? That just goes in with a no. I mean, yes, yes, lack of supply, of course, but like that's very broad. There's a very there's a very there's a very valuable thing here. I I actually teach it a lot. I'm surprised nobody has got this yet. It's one of the bet. It's probably I'll give you another hint. I talk about it as being one of the two best areas of risk to reward in any financial market. The spring. Thank you, Django. Awesome. So whenever there's not enough demand in this range and we have a very established support, we need to break beneath the support. We need to reclaim into the support. This is also how I caught Pepsi and consumers. This is also how I caught like so many of my trades. It's so simple. It really is. Take any range on the daily or weekly if you'd like. Massive support here, guys. External low, swipes it by a penny. That little tiny pubic hair wick will generate enough fuel, hypothetically, if we get back above into the support range, reclaim, find a higher low, hold equilibrium, diminishing spread into the resistance, all established off of the fuel generated from the inventory collection spring phase into the expansion. Here's your SOS. We never even got one. That's how much fuel was behind this. We never even got a SOS. Technically, we got one a little bit higher up right here off of like the gap progression area. Yeah, it technically would because it, you need to not hold so much value to the external low. You need to look at the barcode right here. I mean, it's a spring in terms of like there's no like defined like it's not going to look like a spring to most people in terms of like, but it's the same concept. There's no defined definition of a spring, but looking at the character after the chart, whenever it sweeps that many days of support, that's a spring. That's the whole ideology around the spring. That's why it's very important to follow the concepts of Wyckoff and not the schematics. Because I'm just following the spring here, guys, because I see it break beneath the whole entire support and then fail and get back above into the range and then get a gap up on really nice volume. And then the spread starting to diminish back into the resistance after we close the gap that established the fuel to get up there. Does that make sense, right? Like, does that click in people's head? Because this is more of an educational call than it is really a scan. But thank you, Django. You're learning a lot. I appreciate the answer there. I appreciate the correct answer there. You pay attention. That's good stuff, man. Pepsi. Now you got to just incorporate that into your trading. It doesn't, guys. Nothing matters if you don't know, if you don't execute the spring and you're too much like I don't want to sound like an asshole, but if you're too much of a pussy to do it, you knowing what a spring is, you knowing these concepts, you knowing the art, the game, but not actually putting it to use is irrelevant. Like you have to look at these things in real time and be able to understand these things in real time. Pepsi, I mean, we have a massive support here. You get the undercut followed by a gap down on earnings. What do I talk about as earnings? What do I talk about it as? What can earnings do? Yeah, we caught this. Like I said, I don't speak on any chart that I don't catch, guys. Like I don't I a lot of like people who like claim to be traders. They teach, but they teach on hindsight 2020 charts that they didn't even see in real time. That's super weird. Don't even waste any brain cells on anybody like that. I'm just talking about all my previous trades here that were like really nice throughout the whole entire year. Does it drives liquidity? Yes, and it can potentially shift the shift the shift the control. It can shift the control of who's in control. Uh, Move price to an area where it can accumulate. Yes, but it's basically just a liquidity. It's just basically it drives liquidity. It increases the auction to the point where there's enough counterparty liquidity and strong hand liquidity to the point where if the counterparty liquidity is willing enough to take advantage of the stronger hand liquidity and absorb that liquidity, they're now the stronger hand liquidity, and sellers that have been in control of the chart will now turn into counterparty liquidity. Counterparty liquidity, what I mean by that is just the side that is losing and the side that is like providing the orders that the stronger hand munches up, right? So like if a buyer steps in, that's an opportunity for a seller to get out, right? Sellers are stepping in, that's a big opportunity for buyers to get in because they have enough sellers, they have enough counterparty liquidity sitting at a support and this is a horrible sell too. This is how shit really goes south, guys. I mean, you have this like low right here and there was like a little support established into the earnings and then they marked it down right beneath it. And that could be the same person. I've seen in the tape so many times where we have this mark down happening and then simultaneously there's someone bidding it when they marked it down and I swear I could see it being the same person. I swear I see this the same. You remember shorting Springs every time because I thought dude, I used to do that too. That's that's embarrassing by us. I used to do that shit too. Like that is just like how to be really bad at trading 101, you know what I mean? If you look at what candle? Oh, this candle right here? Yeah. And then you get the volume anomaly right beneath the support, and then the break in this crazy volume or this crazy move, 4% move on Pepsi the next day. I mean, it's a shitty chart, guys, but like I can break down almost any shitty chart, and it could have one simple little tiny Wyckoff concept in it, and I can trade that. You know what I mean? Like it doesn't have to be the cleanest trade ever. And then the higher lows on in the opportunity after the spring here and after the shakeout, right here, right off of this little gap, as well as a reclaim into the support. Like, dude, even all the way up here. I mean, this is a gap up with no, that's not earnings. That's just a gap up, man. That's August 2nd. Go look at August 2nd in the market. The NASDAQ was gapping down like a mofo on August 2nd. Pepsi was getting that risk off rotation. Underperforming consumer that got a spring and then just wiped out all of the liquidity sitting at the very bottom of the range. Calls for a nice easy move like butter higher to recorrect into the resistance or above it. Now you just want to analyze the top of the range and then see if it's a path of least resistance. If you take a look at like Procter and Gamble, beautiful consumer in a path of least resistance model. Look what happens when we break, guys. Look what happens whenever we get the tightening of the daily range and the daily spread. If you're in a moving average guy, I have no problem with that. Take a look at the moving averages, catch up to the name as you kind of move your way higher, and look what happens. September 3rd breakout. Look what was happening on September 3rd in the Nasdaq. Death. Death followed by breakout. Path of least resistance on a consumer. Risk off rotation while tech is dying. Does this like look at the expansion? Daily seller ask. Finally get a close over it. Next following day, Procter and Gamble gets a 2-day trading 2-day move here of almost 3% on the name. Call it 3 days if you'd like, just to really maximize the risk to reward, or even 5 trading days, because we had healthy consolidation up here on little to no volume. 4% move on Procter and Gamble. Does that make sense, guys? You also have a level of progression here. 170 psych, and then it finally gets the momentum and the activity in the tape that it needs. And then break, and next following day, you're paid in probably, I would say you're paid in probably 25 minutes here. You're paid in 15 minutes actually, or I'm sorry, 30 minutes. And then obviously you continue to get paid throughout that whole day. I mean, guys, that's a 100% swing trade right there. Even if you're executing on this day, or even like down here, or like even all the way up here, and you have a really bad fill, or even the next following morning. I mean, it's hard to catch some of these names that are spready right off of the open, but still, I mean, like these trades, dude, they're so nice. What a beaut Nike what has been. Dude, I called this thing all the way down here to start out a accumulation whenever literally like nobody saw it. Like everyone was talking about Nike in the most shitty way possible. Even like really good traders that I know were like, yeah, I'm personally never gonna touch Nike whenever it's down this amount of percent on an earnings report, and like talking about like revenue misses and like business model, and it's like, dude, none of that shit matters, man. It's the COVID 2020 gap. And then no lower lows are making any progress. What a beautiful fucking time to add some commons. Like I said, you don't need to add swings. You don't even need to add options. Buy a shitload of commons and walk away. Come back in 2 months. Like, not everything has to be like a 10 DTE option that runs 600%. I don't know why people think that. And like just because I catch these moves on options does not mean that I like expect or want or suggest you guys to do the same. If you bought leaps here and got a beautiful gain on Friday or cut more commons on Friday, like I I'd give you a pat on the back, man. Like I'm not gonna like make you think you have to have the same amount of leverage that I do as a 21-year-old. You know what I mean? Like we all have our different scenario. Like you don't. Same with Tesla. Like I said, you don't need to trade You don't need to trade August expiration here. I was in August 200 calls down here. You don't need to trade that. Buy end of year. They'll pay you so nicely. EMPH, another one that I caught this year that was a really nice win for me. I mean, several opportunities for this to be a commons trade. Bull gap fill. You buy commons here, you look away. Guys, that is a 44% return on commons in a month and a half. Like, I, I don't know. Look at this. Commons. 25% win in 6 days. High or low off of this gap. I think people real like I hope you guys know I do trade a lot of commons too. I just I don't talk about it like I do options. Because options is it's a great way to obviously increase your leverage. It's dangerous, but you can really make things count whenever you have a really good grasp on the market. I started trading. Thanks, man. I started trading. I'm not really that good of a trader. I'm just like disciplined. I'm just like disciplined and like simple and like logical. Like I'm not like I don't even know a lot. Yeah, who knows? Maybe like may yeah, I don't know. Maybe like I was having dreams about like technical analysis in the womb. But yeah, like I'm really not anything like some people think like I have something so special about myself in terms of like knowing how to look at a chart, but like I really don't. Like I just like I don't know. I'm not good. I'm just like logical. Like people just aren't logical with trading at all. Like you look back on someone's mistakes and you're like, wow, they're not the sharpest knife in the drawer. Like I feel like I'd never really do that, you know? And like that's not hard to do. Like I'm actually not even a I'm actually kind of a dumb person, but like with the thing with trading is like you could be retarded and like decent. So like that's why this is like my career. You know what I mean? Zoom. Zoom, zoom, zoom. Who did you learn from? I feel like Zoom ain't a bad chart. I'm gonna focus Zoom. What were the other tickers that I shared with you guys? I'm gonna go over those real quick and then I'm gonna wrap things up. We've been in here for like over an hour. But I like these calls, I do. I already went over CCJ. I'm waiting for that one. Don't expect no position from me on Monday. So I can go over it a little bit more throughout the week. After we get some digestion, that cools off the premium and shit like that. Mara, I'm not gonna lie, the chart is really bad, but I'm bullish on Bitcoin, so I don't mind it at all. Do you have a position? Okay. Yeah. So if you go take a look at the Bitcoin, does anybody follow Bitcoin? I don't really follow Bitcoin. I'm not very good with following Bitcoin. I'm not really good at trading crypto. I don't know anything about it. Like I said, I like to keep it real. I don't like to be one of them people like Twitter has that's like yaps about shit that they don't know about. You know what I mean? I don't know shit about crypto. Nothing. Zero. So, oh, Netflix. No, I did not go over it. Thanks, Joseph. Did anybody? Was anybody in that Netflix short overnight that ran? It ran like 50%, and I had a Corolla in it. Well, I should have had a Corolla in it. I pussied out a little bit. I'm not gonna lie. A UTAD is hard to define in real time. Oh, you were in. Did you win? Nice. Good stuff, man. Cut a little early. Hey, as long as it's a win and you understand the analysis that happened behind the trade, it's going to benefit you for the future. That's as as long as that's all I care about. Like I don't give a fuck if you win, to be honest. No offense. Like I do, but I don't. Like well, I do. I want everyone to win. But you understand my point. I want you to learn. Like you could win a bunch, and if you're not learning, it don't matter. You know what I mean? Like people win a lot. People There was this one kid who turned 1K into 12K with me. He didn't know anything. And he started like quitting his job. He started doing all this shit. He didn't know anything. He blew it all probably 3 weeks later. That's why I'm saying I want you guys to learn behind like I want you guys to win, but I want you to learn behind everything that's going on. I don't want you to look at this chart and be like, "Oh, I bought 'cause Joe bought and I didn't know what was happening and I somehow got a win." No, I want you to know why. That's the difference between me and a lot of other people on here. They market their little alert system to you like it's going to benefit you for the future for long term if you really are dedicated and committed to the game, and it's just not, right? Like this Discord is way different from any other one. Why do you think I don't have it public? You know what I mean? Like like it's because I don't want no like, dude, I have had a lot of retards in here, a lot of retards that have like asked me and DM me like I never even invited them back. That asked me and DM me and talked to me about like, yo, dude, you need to like add an alert system, bro. Like I don't have any time to do anything. I can't look at a chart ever. Like, well then don't trade, man. 8 people? Good. Keep it to 8. Fuck. I like the 8 people that intervene here. I would say it's a little bit more than 8. It's just a lot of people don't talk here. They just watch the videos, they just go through the motions, which I don't really like either. I'll host one of these. If we have this many people, one, two, three, four, five, six, seven, 8. If we have 8, I'm gonna end the recording right now. Actually, I'll give her Netflix real quick. All right, so Netflix is that chart where you're getting a weekly sell climax, okay? So each and every single higher high is being sold. This one actually on a lot of volume, this one on decent volume, hence earnings report within this candle, I believe. If you go to the daily, yeah, there's the earnings report, and then you go back to the weekly, and it never swept the previous swing high. And then now we're getting a 4 week failure. One, two, three, four, five, I can't count 5 week failure off of this weekly level, right? And then we're getting the price target upgrades into it. We swept the external, which was the initial preliminary failure. That could be basically the UTAD, just because I feel like there's so many people glued to the fact that this is a bull flag, which it is not. Could it get the expansion just because counterparty is liquidity is needed a little bit more? It could do something like this, get a parabolic short setup going, then get the UTAD, then fail, then push down, right? But I mean, it's the same general concept, just a little bit different structure with like AMD, breakout, UTAD, underperformer. Um, you go look at some of the other names where it's like FSLR. This is way different structure. However, you're getting the preliminary distribution, breakout, failure, underperformer. It's just this is herd mentality to look at this like a breakout. I don't care if it wins. Your risk to reward is in your targets are price discovery. What is your risk off of? And how do you know how the auction is going to behave leading into prices that have never been met? I've never understood breakout traders that look at breakouts like this. I've never understood it. I never will. It's unbelievable. Microsoft is probably, no offense, I'm not trying to be an asshole. I think this is probably one of the worst charts I've ever seen in my life. This 4 days of price action here is like, I said this before you even mentioned it. Like, I'm not trying to be a dick. I actually talked about this a couple days ago. Look at general chat. Fletcher actually mentioned this to me, and I was like, yeah, that's probably the worst price action I've ever seen. Um, I mean, we're claiming above a level that is failing. Um, Technically it didn't fail before. If you look at like the weekly, this was not a failure because the preliminary resistance, guys, it doesn't have to test to a T, right? But whenever you get the failure, you need to look for lower highs off of spots that make sense. Does it have to be off of the level? You could get a little bit lower than the level itself, right? But like, I mean, you could take structure within structure, you could take the lower high on the daily, you could take the lower high within the lower highs within the lower high on the daily. You know what I mean? You could take a lot of different like things here. Um, you could take discounted entry lower highs off of where gaps are now being progressive ranges where they need to be obviously held. You could take a lot of things here, but Microsoft's tape, its price action, its volume, everything, like the range, everything has just been really bad here. So I'm going to avoid this one. Um, KO. It's actually a nice chart for continuation. This is OPEX volume though, but what happened here? Yeah, I mean, that's nice. This is a really nice trade if tech sells. The last thing regarding Netflix on the 15-minute is the first wick through the all-time high level, your confirmation of the sweep. I mean, yeah, the 15 just, the hourly and the 15 just looked like shit up here. And you started to see the volume actually stepping into the name on this bar. And then the failure just was really it looked really shit up here, especially after this candle. And then that's technically like your small time frame. It's not really a break of structure, but it's taking out these like previous higher low attempts on like the smaller time frames and failing them. And an ask is moving down actually. And I saw that, and then the bids were pulling. Whenever you see an ask moving from here, we'll make it red into here, and then you see a bid moving from here into here or into here or just down into the opening print or like even just all the way lower into there, it's like the it's going to reverse. So yeah, that this is a 56-minute recording. Holy shit.